Hey, what's going on, party people? It is I, Rags to Riches here, back again with another Crypto Chronicles update. It has been a pretty boring week in the world of crypto, but I did find a few pieces of information and articles that I did think would be worthwhile to share with you guys. Before we get into brass tacks, please note that this is not, cannot, and will not be financial advice, as I am not your financial advisor. If I were, you'd be paying me fees, and I wouldn't be doing YouTube videos. Ha! Please also note that past performance does not equal future returns, and cryptocurrency as an asset class is extremely untested, unregulated, and any invested capital that you put into the markets, you have a potentiality of losing it all. It could get marked down to zero. Just look at Terra Luna or FTX. But on that note, if you do believe in the thesis that cryptocurrency is a technology that may change the world, then it's definitely something you want to keep a pulse of. Starting off with my portfolio here, I use CoinMarketCap to keep a broad idea and pulse on where the market is. It's been a pretty bad week for crypto as far as price action goes, but considering the longer term time horizon that I have for this particular investment, I don't necessarily mind it. Polkadot is down 2.24% on the week. Ethereum is down 2.3% on the week. Bitcoin is down 4.3% on the week. Polygon 5. Ethereum Classic, which I mine, listen closely, that's a miner, down 5.5%. Chainlink is down 7. I don't hold Solana, but I keep a track of it, down 7.4. VeChain 7.5. Zilliqa, I mine that, down 8%. Render down 8.2%. The Graph down 11.8%. Kava down 13%. Filecoin down 14%. And Fetch AI, I believe so much in this project, and I still do, but it is down 15%. Why am I not worried about this? Why? Because I have diamond hands and I'm going to continue to buy the dip. We haven't even started to see the price appreciation of altcoin season. Here's a brief breakdown of how this goes down every 4 years, guys. First, Bitcoin goes into a halving cycle. Then supply for Bitchain goes, or the newly issued supply for Bitcoin goes down while demand continues to increase. We just had the release of the spot ETFs, and that's going to be a continuation of that pattern. Eventually, Bitcoin's price begins to top out, and people begin to invest in some of the larger coins, the Solanas, the Ethereums, the XRPs, the Ton coins, and then eventually those returns begin to parcel out as well, and people continue to go further and further out on the risk spectrum, hence all of these altcoins here. Fetch AI, Filecoin, Kava, the Graph, Render, etc. So do I really care that in a single week when some of these assets are up 400% year on year from when I had initially purchased them, or down 15%? No, not at all, because in the longer term cycle of when these assets are going to pump, we haven't even reached that point of return yet. So prices are down. I see it as a buying opportunity. I will continue to nibble away at positions I would like to build out. But getting into the news, we see from crypto news that crypto liquidations plunge over 80% as the market continues to consolidate. According to data provided by CoinGlass, total crypto liquidations currently sit at 42.4 million in the past 24 hours. This shows the broader cryptocurrency markets haven't seen large movements. In additional detail, long positions are worth about 23.8 million. Short positions are about 18.5 in liquidation. Ethereum is leading the pack with 9 million in liquidations, 3.5 million long, 5.5 million short. And then Bitcoin also secured a fourth spot, reaching 3.25 million with 2.44 million worth of long positions liquidated in the past 24 hours. The current crypto market cap hovers around 2.54 trillion according to CoinGecko, which just signifies that the asset class continues to bolster out and display traditional asset classes like equities, like gold, like fixed income, etc. So consolidation is good because the more the prices consolidate, and then we have additional interest coming in from retail and institutional investors as broker-dealers eventually get comfortable and approve the use and sale of the spot Bitcoin and then eventually Ethereum ETFs to their employees and staff, and most importantly, high net worth and ultra high net worth clients will see price appreciation. It is just a matter of time. But as it is election season, we do have continued focus on the legislative clarity regarding cryptocurrency as an asset class. Crypto breakthrough bill could see Bitcoin, Ethereum, Block, DAG, and network prices to skyrocket pretty soon. Coming in from Yahoo Finance, Prices are near all-time highs. People are projecting Bitcoin to potentially go out to $100,000 to $150,000 as analysts are noticing bullish price action. Other blockchains and projects are also continuing to show significant positive impact from Wall Street and additional interest. But we did have a recent U.S. Senate Select Committee on Intelligence pass a funding package which included a little-known crypto provision. This provision mandates crypto companies to collect more information about their users or face sanctions designed to prevent terrorist financing. According to CoinDesk, this would move the speed and automate the process to sanction foreign digital asset transaction facilitators, including crypto exchanges linked to users who support terrorism groups. This is known specifically as the Intelligence Authorization Act, passed unanimously with a 17-0 vote. However, the crypto section was not highlighted when Senator Mark Warner, the Democratic chairman of the committee, announced the vote. Warner emphasized the bill embraces and enhances the U.S. intelligence community's ability to identify and counter technological threats from adversarial nations and designates foreign ransomware organizations as hostile cyber actions. The big point of what I want to raise this article for is that we're seeing increasing focus on cryptocurrency as an asset class and legislation coming out about it because we have the elections coming up. Donald Trump has relayed himself as a pro-crypto candidate. Joe Biden has recently pivoted to match that stance, and as leaders in the political space continue to focus on cryptocurrencies as an asset, we will see more bills like this coming out providing incremental regulatory clarity, which may be good and may be bad depending on the nature of the bills, but is important because real money, institutional money, bank money is not going to invest in crypto until they have certainty about the rules of the game, and until these bills come out, there is no certainty. Now our friend Michael Saylor continues to buy the dip on Bitcoin. He believes it could go to potentially $1 million. And while we are looking at the hardest money asset on the planet, that being Bitcoin, time will tell if it's actually going to get there. We do expect to see continued price appreciations. In more important news, though, the SEC now demands $102.6 million penalty from Ripple in the XRP case. For any of those who were unsure about what actually happened here, XRP is a cryptocurrency that is primarily focused on cross-border exchanges of currencies, focusing its target demographic of users to be financial institutions. Currently, when you want to send money from one place to another, typically cross-country, it does need to go through the SWIFT network, which creates latency issues, timeliness issues, and expense issues, which XRP is hoping to solve by perhaps intermediating currency transactions through a cryptocurrency like XRP, which was the original use case of doing so. And then you can speed up the timeline in which I can send money from one place to another, which with remittances being very high in the United States from international individuals living in the country, that will increasingly build up a cause for that. Getting into the article, the U.S. SEC has replied to Ripple Labs' request for a lower penalty regarding its ongoing case. They suggested a more reasonable penalty of no more than $10 million, drawing comparison to the Terraform Labs settlement. The SEC originally sought a final judgment against Ripple of nearly $2 billion. In a letter to District Judge Annalisa Torres on June 14th, the SEC explained, in asking the court to tether its penalty determination in this case to the settlement in Terraform, Ripple fails to note that the corporate defendant there is in bankruptcy going out of business for good. The SEC is not a fan of Ripple, and they've continually been in a cash-strapped fighting situation to try to actually get SEC to not make them pay as many in fees as they have been. Time's going to tell if they're going to win this legal battle, but there does continue to be continued pressure from the SEC to slow down the growth and expansion of crypto. Now, the reason why people like cryptocurrency as an asset, as mentioned by Forbes, is that there are some real issues with the U.S. dollar fiscal situation. Particularly, the IMF is issuing a striking warning about U.S. dollar collapse as the Fed primes Bitcoin, Ethereum, and XRP for a potential price boom. The Federal Reserve has quietly admitted recently gold is replacing the U.S. dollar. The IMF is concerned about the state of the US dollar as well. If you think about the amount of debt that the US has released recently in the form of fixed income securities, treasury bills, notes, and bonds to the broader economy and the broader global economy, high interest rates make it so the U.S. is having a very hard time servicing its debts. And accordingly, there is an increasingly worry in the economic and crypto community that if the U.S. can't afford its debts at current interest rates, perhaps they have to cut rates, perhaps they need to buy fixed income, perhaps they need to continue to monetize the debt to sustain this game that we're playing with our economy. But as you continue to make currencies weaker, in particular the U.S. dollar, which will suck in the other debt from other currencies, you're going to see continued price appreciation on a U.S. denominated value for Bitcoin and other hard money digital assets. IMF has taken notice, and I think you should as well. Now, we do have our continued political pressure from the 2024 political campaign. Donald Trump, coming in from Cointelegraph, the future of money, vows to end Joe Biden's war on crypto. Donald Trump has made it very clear in recent press conferences and rallies that he is here to stand for crypto, at least to some degree. Whether or not he actually understands it or not is a different story, but quote-unquote from Mr. Trump, crooked Joe Biden, on the other hand, the worst president in the industry of our country, wants to die a slow and painful death. That will never happen to me, he posted on May 25th to Truth Social. He's also continued to take aim at Biden while arguing the U.S. must not settle for anything but top place in the crypto industry, and he criticized Biden's harsh stance on crypto. And this is part of the reason why the Democratic Party has recently flipped the script as far as their stance on crypto, as they're seeing increasing pressure and a broader portion of the U.S. population that is supportive of the asset class. As this becomes more in the political forefront, the more likely we are to see legislative clarity be implemented in the cryptocurrency industry. This would be good, as we need clarity for institutional capital investment. So the more Donald Trump speaks on crypto, the more likely we are to see increasing conversations about that, which would be potentially a bullish catalyst unless they shut down the whole game. And on a final note, this is just something to have as food for thought as we head into the next week. Coming in from CoinDesk, mass adoption may ruin crypto. It might be better off keeping it as a niche. Daniel Kuhn goes through a few arguments as to why this should be the case. To briefly go into it, we have crass adoption. This is a casebook text of economist Robert Shiller's irrational exuberance. When you have promises of reinventing everything from money to the internet that sparks people's interest, people buy into the dream of decentralization in the form of cryptocurrency. And while that is a good and true thing, like we saw in Tulip Mania, like we saw in the late 1990s heading into the 2001 housing crisis, when you have uninformed retail capital investing more than they should and more than they're willing to use in an asset class, you potentially create the risk of producing a bubble. When you have a bubble, people get their emotions wrapped up in their investments and may not actually make long-term and good decisions for their capital, and this is a growing concern with the increased adoption of cryptocurrency. I think spot ETFs for Bitcoin and Ethereum are a good thing. It gives people easy access to get into the industry. But if people who have no idea about risk management only want the price to go up, are going to buy assets that they don't understand, especially some of these more niche altcoins, or especially meme coins, you increase the risk of there being a bubble, which then could be bad for prices in the medium term. Long term, I think just like we saw in the 2008 housing crisis, after the crash, prices resumed and continued to increase. In the same way we saw after the 2001 dot-com bubble, 99% of the companies went to zero, and the ones that survived ended up changing the world. A very similar setup is happening right now in the cryptocurrency landscape. Those coins that I showed you in the beginning of the video, the Polkadots, the Polygons, the Kavas, the Chainlinks, the Fetch AIs, the Render tokens, etc., are some of those projects which I think are here to stay, that are going to make broad changes to the wider economy. And despite near-term volatility that we might be seeing in the markets, that doesn't mean you shouldn't stay invested. Investors buy good assets at low prices, and when you see an opportunity to buy something at a low price, perhaps you should take that opportunity to capitalize on market conditions. On that note, like I said, guys, it was a pretty slow week in the world of crypto. If anything else does come up that is of note, I will be sure to post it on the channel. If there's anything you guys want to see in particular, anyone you want me to bring on the show, I'd be more than happy to. Just as a FYI, we do this show once a week whenever I'm feeling motivated, talk about the crypto markets, my portfolio, and views on what is happening in the economy. I hope you guys enjoyed the content. Be sure to like, subscribe, and share the video with your friends so they can get a pulse on what is happening. And on that note, I will see you all next time. Bye now.